Assalamualaikum and hi everyone. Today, I, Muhammad Firdaus bin Rozmal from DBF6C want to share with you about accounting, introduction of accounting. I will talk about conventional accounting and my friend will talk about the Islamic accounting. Conventional accounting. Accounting is the system that measure business activity, process that information into reports, and communicate this finding to decision maker. Accounting also can be defined as the process of identifying, measuring, communicating economic information in order to permit informed judgment by the user of information. After that, accounting can be distinguished into two basic functions, namely accounting and management accounting. And the last one, accounting standard are codified rules and guidelines of accounting principle and practice for various types of business transaction and issues. Okay, this is the example of conventional accounting. Accounting conservatism may be applied to inventory valuation. When determining the reporting value for inventory, conservatism dictates the lower of historical cost or replacement cost is the monetary value. Okay, next about characteristic of conventional accounting. There is 6 characteristics from conventional accounting, which is understandability, relevance, consistency, comparability, reliability, and objectivity. Okay, for understandability, this implies the expression with clarity of accounting information in such a way that it will be understandable to users, who are generally assumed to have a reasonable knowledge of business and economic activities. The second characteristic of conventional accounting is relevance. This implies to be useful accounting information must assist a user form, confirm or maybe revise a view, which is usually in the context of making a decision. Okay, the next one is consistency. This implies consistent treatment of similar item and application of accounting policy. Other than that, the characteristic of conventional accounting is comparability. This implies the ability for user to be able to compare similar companies in the same industry group and to make comparison of performance over time. Next one is reliability. For this implies that the accounting information that is present is trustful, accurate, complete, which is nothing significant missed out and capable of being verified. Okay, the last one for the characteristic of conventional accounting is objectivity. This implies that accounting information prepared and report in a natural way. In other words, objectivity, it is not biased toward a particular user group or best interested. So that is 6 characteristic of conventional accounting. That's all.
Assalamualaikum warahmatullahi wabarakatuh. My name is NASHRIQ bin JAMALUDDIN and I am from DBF6C. So today I want to present about the introduction of the Islamic accounting. So let's move. Okay, so the first one is the definition of the Islamic accounting. Okay, Islamic accounting can be defined as the accounting framework which plan to furnish client with data empowering them to manage their organization and association as indicated by Sharia or Islamic law. Islamic accounting also is a tool which enables Muslims to evaluate their own accountabilities to God. Okay, so that is the definition of the Islamic accounting. Okay, in Islamic accounting, there are two basic principles, which is justice and benevolence. Justice should be maintained within the society. In Islamic accounting, the system is not allowed to exploit others. And the principles also state that benevolence is related to perfection and beauty in Islam. Benevolence also will keep us away from bitterness and undesirable things. Okay, let's move to the characteristic of the Islamic accounting. Characteristic of Islamic accounting have two, which is the first one is a financial measurement aspect, and the second one is the disclosure and presentation aspect. So let's move to the first one, financial measurement aspect. Okay, most Islamic accounting consider zakat to be the cornerstone of the measurement tools. There are three reasons why take zakat as the main focus of the measurement issues, which are: the firstly, zakat is the concept in Islam that deals specific with the measurement asset. This can be inferred from some verse in the Quran and Hadith of the Prophet Muhammad regarding the time and the way in which zakat is calculated. Secondly, zakat is considered as one of the 5 pillars in Islam. This implies that Muslims are encouraged to establish instruments in order to ensure this obligation can be fulfilled in accordance with the Sharia of Islam. Thirdly, the development of the accounting in the early Muslim state closely related with the zakat practice. Other than that, Muslim jurists also said that zakat based on a prevailing price necessitated the application of the current costing rather than the historical cost. And lastly, the conservatism theory is not the selection of accounting technique with the least favorable effect of the member, but rather than the selection of accounting technique with the most favorable impact on the society. For example, better to overestimate fund for zakat purpose. So that's for the financial measurement aspect. We move to the disclosure and presentation aspect. Okay, the importance of a disclosure and presentation is to fulfill the duties and obligations according to the Islamic Sharia. To achieve this purpose, the Islamic company is expected to disclose at least 3, which are: the firstly, any prohibited transaction they made; second is the zakat obligation they have to pay and have already paid; and lastly is a social responsibility. Social responsibility will include charities, which to the employees, and environmental protection. And lastly, this means that financial reporting in an Islamic society is likely to be more detailed than what is currently prevalent in Western societies. Moreover, the social accountability and full disclosure are the basis of Islamic corporate report. They recommend that the current value balance sheet be included as a part of the reporting criteria of business operating in the Islamic economy. Furthermore, the income statement should be regulated as note because of its corruptive influence in directing people to become highly profit-oriented. Next, value-added system, or known as VAS, also should be applied because the distributional characteristic of the VAS would support accountability in Islam through cooperative enterprise. And lastly, Islamic financial statement require an emphasis of transparency and avoidance of manipulation, which is manifested by the full disclosure principle of Islamic corporate reports. So that's for the characteristic of Islamic accounting, which is financial measurement aspect and disclosure and presentation aspect. So lastly, we move to the difference between conventional and Islamic accounting. So the first, conventional accounting is based upon modern commercial law permissive rather than ethical, which means conventional account is only based on the rational. For the Islamic accounting is based upon the ethical law originating in the Quran, which is in the Islamic law and Sunnah. Next, conventional accounting is a limited disclosure. This is mean provision of information subject to the public interest. But for the Islamic accounting is full disclosure, which to satisfy any reasonable demand for information in accordance with the Sharia. That means Islamic accounting is to satisfy the reasonable demand from the people to in accordance with the Sharia law. And then lastly, personal accountability for the conventional accounting. This is for focus on individual who control the resource, which means conventional accounting is only focused only one individual that who control the resource. But for the Islamic accounting, it's a public accountability, which means this they is only focused on the community who participate in exploiting resources.
Assalamualaikum and a very good morning and good evening. I will to our lecture, Puan Asha Kamal. Today I will present regarding our assignment for accounting for Islamic finance. My name is Aliff Syakirin bin Zamali. My ID number is BMF 1806047 and I am from class DBF6C. Today I will present about two topics, which is accounting concepts and Islamic perspective, and the next one is what is our fee. So I will begin with my first topics, which is accounting concepts and Islamic perspective. Based on Islamic perspective, there are four accounting concepts, which are accruals, spread unit entity, going concern, and periodicity. I will go one by one to explain it to you. Okay, so for the first one is accruals. What is accrual? Accrual is the accounting framework for acknowledging business transaction and activities. For each activities that happen in a business, accrual is the accounting guidelines and rules for acknowledging the transaction that happen. So accrual is a general entry used to identify revenues, expenditure, sales, expenses that have received or spent in the company and business. Accruals are necessary to ensure that all sales and expenditure are reported in the relevant reporting period, regardless of the timing of the associated cash flow. It means that accruals are important to make sure that sales, expenditure, each transaction that happen in a business are reported in a specific period of time. The revenue and expenses are accrued as they are earned or incurred. Expenses also recognized as accrual basis when they occur and not as money is paid. So the next concept is spread unit entity. What is spread unit entity? Spread unit entity is separate record of the transaction between a business and its owner. So it means that the CEO of the company and business have a different and separate transaction with his or her business. It's useful for determining the true profitability and financial position of a business. An owner or the CEO of the company can withdraw funds from a company or business without reporting them as either loan, reimbursement, or sale of equities. It means that as a owner of the business, we cannot simply take the money or take the asset without recording it or reporting it as either loan, reimbursement, or sale of equities. An owner is the primary investor in a property and arranges to have his company run in exchange for a monthly rent payment from that house. So the third concept is going concern. What is going concern? Going concern is the idea of going concern is the expectation that the company can stay in the business for the indefinite future. It means that we expect that the business can go for a long-term period. Business will not be forced to close down operation and liquidate its properties in the near term for its operation. So we expect that the business will not have deal with the bankruptcy or be forced to close down their operation or liquidate its properties in a short time for its operation. If the business entity is no longer concerned, the real value of the properties will be shown. So based on these assumptions, assets can be shown at historical cost in the balance sheet. as the business will be in operation for the remaining life of the assets. So we'll go for the last concept, which is periodicity. Periodicity is assumption states that an entity can report its financial results within specific time limits. This typically means an entity is regularly reporting on a monthly, quarterly, or annual basis its performance and cash flow. So each business or company will decide their regular reporting whether on a monthly, quarterly, or annual basis, so that they can prepare and they can record their financial results within specific time limits. Such intervals are kept the same over time in order to ensure comparability. The information must have at least 4 key qualitative features allowing users to make informed decisions, which are the first one is understandability, relevance, reliability, and comparability. I have done with the accounting concepts and Islamic perspective, so I will go with the what is AUFI. AUFI stands for Accounting and Auditing Organization for Islamic Financial Institution. So I will tell all about AUFI. AUFI established since 1991 and based on Bahrain. So what does AUFI do? AUFI is a leading international non-profit organization responsible primarily for creating and providing guidelines for the global Islamic finance industry. So for the Islamic finance industry, AUFI is the leader, is an important organization that is responsible to create and to make and to provide the guidelines, the rules, and the regulation for this industry. So it has produced a total of 100 guidelines for international Islamic finance in the fields of Sharia, accounting, auditing, ethics, and governance. So AUFI is supported by a number of institutional members from over 45 countries, including us, Malaysia. So that's all for me. I have explained about what is AUFI and accounting concepts and Islamic perspective. That's all for me. Thank you and have a good day.
Hi, Assalamualaikum. My name is AMIR bin MUSTAPHA from DBF6C. Today, I will explain on MASB FRI first, or in 2010 MASB TRI 3. Okay, I will focus on 5 aspects in this session. So let's start with definition. Okay, for the Malaysian case, the MASB, which is the Malaysian Accounting Standard Board, recognize the need for the collection of detailed guideline and accounting standard as the Islamic banking and Islamic financial system evolve, in particular to prepare for the growth of Islamic transaction and to fulfill the objective of fostering investment in Malaysia, Islamic banking and capital market. The FRSI first is the presentation of Islamic financial institution in financial statement issued by MASB to provide a basis for presenting and reporting the financial statement of institution engaged in Islamic banking activities. Okay, let's move to the second aspects, which is what are the problems in order to make Islamic accounting standard. Okay, I have found 3 factors or 3 problems, which is first, lack of consistency with Sharia, because Sharia have different advisor for each bank. And second is lack of comparability in the accounting management of Islamic transaction in order to identification, calculation and disclosure. And the last one is lack of sound supervision and hampers Islamic banking growth. Now I will tell about what are basics presentation and disclosure of financial statement that MASB serve or made, which is it also similar, which is we have balance sheet, income statement, statement of all change in equity, or other than those arising from capital transaction with owners and distribution to owners, cash flow statement, accounting policy, explanatory notes, and appendices. Okay, yes, the financial statement is a bit similar to the conventional standard, which is conventional financial statement, but I have figured out three special features, which is first, factors that evaluate performance, including environmental changes, its reaction to those changes, and investment strategies that seek to sustain and enhance efficiency, including its dividend policy. And second is financial outlet, which is the gearing policies and the risk management strategies. For example, risk transferring, risk sharings, and others. And the last one is the power of the Islamic financial institution and its capital, which are not expressed in the balance sheet. Those are the special features of the Islamic financial statement. Okay, let's move to the what MASB TRI third prescribed in the statement of Islamic financial institution. Okay, let's start with first the name of Islamic financial institution, whether it's a bank, it's a company, it's the insurance takaful company, I'm sorry. And second, whether it's individual or group financial statement presented. And the third one is balance sheet date, or the period that covered by the financial statement. For example, usually for in the 31st of December for certain years. And number four is reporting currency. For example, ringgit Malaysia, US dollar, Singapore dollar, Saudi Riyal, and others. And the last one is the level of precision used in the presentation of figures in the financial statement. For example, maybe plus one RM 1 ringgit, plus one cents, or others. I'd like to share some uniqueness of MASB additional disclosure, which is there is 5 uniqueness, which is risk regarding wadi'ah contract, which is safe custody of deposit, are be disclosed. Second, mudarabah deposit disclosure in profit sharing ratio, because the different risk profile between the capital provider and the mudarib or the agent. And the third one is istisna payable, and fourth is salam payable, and the last one is dividend payable. That's are the uniqueness of MASB additional disclosure. Okay, we are done talking about the uniqueness, the definition, what are the MASB prescribed it. Now I will move on to types of the technical release that have been issued by the MASB. We have first, we have TRI accounting for zakat and business. Second, we have technical release ijarah, and the last one we have technical release trade, which is presentation of Islamic financial statement for the Islamic financial institution. Unfortunately, the technical report is not compulsory to be used in the Islamic financial institution in Malaysia. Okay, we are going to the one of the major aspect in the MASB technical related, which is their function. First, their function is to cater for the rise in Islamic banking and Islamic-based transaction, as well as the goal of fostering investment in Malaysia Islamic banking and capital market. Second, to provide a framework for filing and publishing the financial statement of institution engaged in Islamic banking activities. Okay, we have a question here, which is why it's difficult to develop Islamic accounting standard. Okay, I will tell two difficulty, which is the process of establishing Islamic accounting standard has led MASB to engage in a comprehensive and throughout due process and to elicit feedback from experts, accountants, auditors, regulators, and consumer of Islamic financial institution. And second one, MASB has also recognized that all of its requirements are legally binding, and must ensure that the accounting standard is issued are enforceable without impeding Islamic banking development. Okay, I will like to conclude my presentation with why MASB a bit different to our fee. This is because implicitly we can infer that it is not that MASB does not want to create strings in Islamic accounting principles, but the accounting itself is already seen as Islamic due to the general overview if it's just the form of a concept. That's all from me. Thank you.